Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, November 8th, 5:20 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we continue to be in a longer-term correction, down just less than 20% now on the S&P 500 year-to-date, along with a short-term uptrend for an O'Neill type follow-through day that we had within the past week and a half, 2 weeks, and some leadership holding up and acting well to supplant that. You can see over on, or support that, I should say. You can see over here on the trend gauge, market leaders flashing bullish. Then we go to 3 time frames on the major indexes, and we've got a mixed bag there. Trying to rally, trying to put in a bottom, mixed results so far. Our short-term 21-day exponential moving average is on neutral, as all of the indexes, except for the NASDAQ 100, are above their 21. Medium term, all the indexes are now above their 50-day moving average, except for the NASDAQ 100, although just one close above on the S&P 500, and that combined with the failure last week, we really need to see some strength there to get us off of downtrend and at least a neutral. Long term, only the Dow is above the 200-day moving average. The other indexes struggling below. So what happened today? Very odd day today. We had a gap up of about 1/3%. And the markets just pulled back, tested 3,800 early, held, and then went on a nice 2-hour run up to 39.59. Started a little bit of an intraday base, normal behavior, and then a little after 2 o'clock, a harsh sell-off kicked in. Actually, a little after 1 o'clock, a harsh sell-off kicked in, and this was based on one of the second largest crypto exchange and announced that they were having liquidity issues. And apparently the third largest, Binance, just pounced on them with a takeover offer, apparently these two exchanges, the CEOs are bitter enemies, so there's a bit of personality issue, cult of personality going on here. But when that takeover hit, it kind of calmed things. In the meantime, we had a sell-off of about 2%, almost 2% from the high to the low. Put in a bottom, reversed, and then we did an undercut of this key 3,800 support area, and we started selling a couple things to lock in small gains. But that was just a panic. Once that takeover offer came out, we took back off to the upside, so we reclaimed 3,800. We put a little bit more risk on after that happened. And we'll talk about the trades that we did in-house when we get to the portfolio discussion on the tail of the tape. But bottom line, very volatile intraday, 3,800 undercut and reclaim. When you undercut support and reclaim it, that's bullish, and it also puts in a low for you to target. So if that low today is broken, 37.86, that would also indicate a break of that 3,800 resistance, former resistance, now acting as support. So it gives you a good point to reference on any future pullbacks. So across the board, G6, growth stocks continue to lag. G6 up 0.1% today. S&P 500 up a little over 0.5%, 0.56. NASDAQ 100 up 0.7. Dow continues to lead, up 1%. Mid caps up 0.2. Russell 2000 small caps just barely negative. Global diversified 60/40 stock and bond up 0.25%. In-house GROTECTION, we were up about 0.5% midday before that sell-off hit. The harsh pullback, we didn't want to go negative on some things that we recently bought, so we locked in the profits in that. And after the rebound, as I said, added a little bit more exposure on a couple things, and we will discuss that, but small loss on the day. So let's get into the charts, but first let's get into a summary of what we do here at Revere Asset Management. We are a registered investment advisor. Conflict-free, transparent. We do videos 5 nights a week in a podcast. What other registered investment advisor tells you what they own, what trades they make during the day, and is fully accountable for their losses, fully accountable for times that we underperform. We tell you what we're doing. We'll tell you when we're outperforming too, which was quite a bit of this year. We're down about half of what the S&P is down on the year, and nowhere near the 27.5 maximum drawdown that hit the S&P this year. So our flagship portfolio is called GROTECTION. It's designed to grow assets during market uptrends and protect them during market downtrends. If you've been following us this year, we've been fully transparent with what we do, when we get in, when we get out, why we're doing what we're doing. Basically, we manage individual client accounts using trend following rules across 3 time frames, plus based on the action of the leading stocks, as was shown on the GROTECTION trend gauge in the introduction. So in an ideal uptrending market, such as back last October, November, when we're above all 3 of the moving averages and they're configured as such, we're the equivalent of all in the market, basically as long in individual stock sectors and the indexes as we can comfortably be. If things start to roll over and become more neutral, the indexes trend sideways, we reduce overall exposure. In a downtrending market, the slopes of the lines will start to roll over and we'll really get more and more defensive. And in a downtrend or a severe downtrend, if we break the 200-day moving average, we will be at a maximum defensive posture, and that is because of this chart here. All of these bear markets occur below the 200-day moving average, so pretty simple dividing line between a healthy market and a risky market. When the market's risky, we pull back very clearly. Our stops will take us out. We'll mix in a couple of shorts, and we'll look for short-term entries. If the market decides that it's trying to put in a bottom and try to go higher, the last indication that it tried to do that occurred on 10/13 with this undercut of recent support and slingshot back above it. And since then, we've been taking 2 steps up, 1 step back. Right now, we're in the midst of the 3rd day higher. And if you're interested in an approach like this, give us a shout. You can email me, don@revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. You can also email my partner, Dan Stewart, dan@revereasset.com. He's a CFA, one of the most knowledgeable financial people I've ever met, and he will get the answers to any questions that you might have. So S&P 500, let's take a look at this intraday volatility that I was talking about. We'll go on a 5-minute chart here, and you can see the gap up test of 3,800, which we got back above. Let's go to the 60-minute chart first of all, so we've been pointing out this 3,800 area that's been a battleground. We got back above it late yesterday, and now that test, anytime you test it, undercut it, and reclaim it, that's bullish, and that's what we did. And like I said, the intraday low today will be a good gauge. Any pullbacks should first of all hold 3,800, and then certainly hold the low, that spike low of the intraday today. 3,850 is where we are now. That's about the next, or that's where we peaked today. Somewhat of a significant resistance area, but really 3,900, the next resistance area higher there. And you can see once that 3,700 held, that was the most recent back test from that 3,700 to 3,800 area. I was pretty convinced that we were going to be going lower after the Fed announcement last week. Our stops took us out of a couple things, wasn't in a hurry to get back in, but the market has spoken, and 3,700 support did hold, and we're bouncing off of that, and we overtook 3,800, back tested it, held it, and got back above it. So as long as 3,800 holds, we're in pretty good shape. NASDAQ 100, on the other hand, with that failure today at the 21-day moving average, we put a short on when it reversed into the 21. As you know, this has been the weakest of the averages. 3 days up at the top of the 3rd day, it reversed. That's just a good low risk entry for a short. We get back above today's highs, we'll cover it. So basically, we're long the S&P, short the NASDAQ. We also got long small caps, and took our small profit in the Dow long that we had on that pullback today. So there's the NASDAQ 100. Let's go to the Dow Jones. Very strong index. We undercut this breakout area today. That was where we took our profit on the DDM. I understand very clearly that we're still holding the 200. Also understand this was a third day up and reversal. You could actually consider it a fourth day up if you consider this undercut and close at the high of the range as what's called a pink rally day in O'Neill terms. But discretion the better part of valor when the market is in a free fall. We just wanted to lock in that gain, and then we shifted our risk over to the S&P 500 when it reclaimed that key 3,800 area. So there's the Dow. Here's mid caps. Undercut and reclaim the 21, coming into this declining 200-day moving average at this 450 area. We're going to see what happens when that's tested. Last time the 200-day declining 200-day average was tested, that's where we failed back at the middle of August. IWM, basically 3 days tight, and we've bounced off of this harsh 2-day pullback. When we tested and bounced at the 21 today, that was a low risk entry, so we put on TNA, a small size on long, index long on IWM, and as long as we hold the 21-day on that, we'll hold on to that. So a little bit of a give back on relative strength over the last week, but that's normal after 2 strong weeks up on a relative basis for small caps. So let's take a look at BITO. All of the let's look at the intraday. All of the crypto assets got hit today. First, you saw the gap down, and pretty much all of them gap down at the open. And again, this is due to that crypto exchange liquidity issue. Started to rally, then the liquidity issue became stronger, and all of crypto rolled over here, starting a little bit before noon today. Let's look at GBTC. We used to use this as the proxy, but it's just it seems like a broken product. It's trading at such a discount to the actual Bitcoin. I'm not really sure what's going on with that. I've read a couple things that there's an arbitrage situation going on, and it may never crawl out of this. But and then let's look at ETHE. This is Ethereum again. This is not a true ETF, but you can see rally and then big sell off. Let's go to a 60-minute chart on these, because the 60-minute chart is where we had been showing that recent rally. This looks, ETHE looks very much like BITO, which is the true futures ETF. So remember that 12.5, 13 area that we were talking about. We came up to it as resistance. We flagged, we got back above it, back tested it. My comment yesterday was really hasn't failed yet. It's failed now after this gap down, rally back up into 1250 and roll over again. Maybe it's just Bitcoin still is really obviously the cream of the crop of all cryptos. I still consider all cryptos to be a game of musical chairs, but they very clearly have some legitimacy if they've got a futures product being traded, and Bitcoin does, and BITO is the ETF that's based on that. But for now, that's a failed breakout above this 1250 area. And there is a way to short it by BITI, the inverse ETF to the futures. You can see it actually had a little bit of breakout above this 4126 area today before reversing to the 40 area. I've got just kind of a reminder. Don't think I'm really going to short this because of the volatility and the fact that you have weekend events that you can't get in or out of. But there's BITI, that's a way to short. So this liquidity event also caused a spike in the VIX. Let's look at that intraday. Let's look at it on a 15-minute chart, and you can see that VIX spiking the same time that the indexes started selling off, right around 115, and that pulled back a bit during the day. VIX on the daily chart still under all the key moving averages, but note, I've been saying how it's buried on the stochastic on the daily, a little bit of a hookup today with that move higher, but still in this key 24 to 26 area, which is kind of the neutral zone. How about bonds? Let's look at TLT. TLT up today, which means rates were down a little bit. Let's look at the 20-year 0TNX. 20-year pulled back a little bit, still holding the 21-day moving average. In fact, holding the 8 EMA are the 20-year and, or sorry, the 10-year and also the 30-year, the 0TYX. And you can see there just these interest rates are causing a problem for the debt, causing a problem for businesses and consumers. So let's go to the tail of the tape now. Some changes in the technicals to a positive stance with the indexes and half of the G6 having their daily stochastic hook up. You still have the NASI RSI in positive, that the dollar UUP. I didn't look at that chart today. Another lower low for UUP. 3 days down off of this island top, down at the bottom of the range, below the 50-day moving average, below the 21. Stochastic still has room to go lower, and that's a tailwind for stocks, plain and simple. It has been the last 3 days for stocks as the dollar has pulled back, and it's not even moving in sync with interest rates. So that's a positive. The negative is that the interest rate charts still above their 21-day exponential moving average. Put call spiked today on that liquidity event, closing on the higher side versus recent at 1.16. The VIX also up 5%, as I mentioned. Fear and greed down 3 to 58. Put the bull case from yellow font back to green font with the undercut and the hold of the 3,800 and holding the 21-day exponential moving average on the pullback, didn't even touch it. Bear case, we need to break the 21 and have a rally failure. News, pretty much covered it already. The crypto exchange election results tonight were day up 3. CPI Thursday morning is going to be critical. Expectation positive after the move above 3,800 yesterday. Crypto-related volatility undercut and reclaim on that, so that's a positive. NASDAQ 100 failed into the 21-day exponential moving average, and that's why we've got that QID short on. Here's the 120 intraday action, the 3 waves down, bottomed at 37.86. That's our reference point. Low to high today, 37.86, and the high was 38.59 as we do some real-time editing here. Bonds higher, solar strong on the backs of some nice earnings, and then after hours, another solar stock, Array, ARRY, is up strongly. Semiconductor strong, biotech strong, gold, silver, and gold and silver stocks very strong. And again, they're tied to the weak dollar. Oil's also down, nat gas down, BITO, Bitcoin down, and DBA, ag commodities down. Focus coming into today, our holdings, we'll look at those charts and also 5 other stocks that we were looking at. We bought 2 of them, bought First Solar and ANET, also rotated funds into SPXL, and QID on the failure in the 21. We got rid of the SPX short and took profits on IBB and DDM on that pullback to make sure they didn't go negative. Bottom line, crypto liquidity induced volatile day. But undercut and reclaim ends up positive above 3,800. So let's take a look at the charts of what we've been focused on. And let me start with that Array, ARRY. This is a former leader in the solar space. We've been saying for a while that many solar stocks broke down. This is one of them. This is one of the recent ones that broke down, but it did hold the 200-day moving average, so really not a totally broken chart. 50-day acting as resistance on this move back up, but up 14.5% after hours. Going to get it all back above the moving averages. Big area of resistance here is this 20 area, however, which acted as support when it was most recently trying to pull back after its last gap up on earnings. 20 held, 20 held, 20 broke. Now let's see what happens if we come into 20 again tomorrow as I reactivate my alert. So holdings, let's go through those first. PI had a rebound day. Still holding the low of the range below the 80 MA, holding above the 21. We've got a small loss in that 2% position. We've got 5 2% positions basically with varying degrees of profit and loss on them. STNG continues to be the standout. We're just going to ride this up through the 8 EMA, very similar to the last time. It bottomed, pulled back, had a correction. This and this look very similar, and we're going to treat it, let it see if we can get a multi-week ride above this 8% EMA, and then if it gets tired out, we'll take our profit. It may be, if we're lucky, we're up about 10% on it. If we're lucky, we'll be 20% before that. Haven't added to it, just never felt comfortable on the move above earnings. Probably the next day pullback would have been a reasonable time to do it, but then that was last week when we had going into the FOMC. So that's my story there. LNG, small positive on this as it reclaimed the 21-day exponential moving average today. And then IBB, as I said, when it pulled back from this break above the recent highs, we locked in our profit on it, didn't want to go negative on it. So what we're looking at coming into today, big pre-market gap on GFS, former leader. The volume was there, just didn't pull the trigger on it. By the time it actually started off badly. Well, started off the first 15-20 minutes badly. It had the big gap up and then sold off immediately. It was looking like a miserable failure. And then it righted itself. Really, the spot to buy would have been here. This break above 60. So it got above 60, pulled back. Here's 60 acting as resistance, broke above 60, and then the 60 is a key area because it pulled back and tested it again today. I've got an alert around 60.50 on it. If we pull back there, that would be a reasonable entry on it. You can see that 60 very clearly. It was resistance over here. It was a battleground area over here on the left side of the chart. So good area. Nice numbers, 22% sales growth, 67 cents per share. I don't like that the earnings are supposed to go down next year, but this is one of those foundries that's raking in a bunch of money from the government to build a factory, I believe. So on to the next stock we were focused on. ANET, we've been talking about it, how it had its gap up on earnings, pulled back for 2 days, big upgrade, gapped up, held it, inside day. When the second inside day on this, it undercut that day when the volatility kicked in, but this is where we took our position. We're down about 1% on it. Good strength there on ANET. Nice fundamentals also. Wing. Restaurants had a shakeout. The steak restaurants, Texas Roadhouse, had a shakeout yesterday on Ruth's Chris, terrible earnings, but got back above the 21. Wing has been acting better than Texas Roadhouse. It pulled back to the pivot here. You can see undercut it and reclaimed it. We're trying to get a decent entry on here. It's right near the pivot plus 5%, a little bit of a pullback, and a good acting market. Maybe an opportunity for us to enter it. For solar, with the third day pullback today, we got into it. We're down a couple percent on this. We got into it, I think, right around 150-ish when it cleared 150 this morning. Then it pulled back but held the 80 MA. All bets are off if this breaks yesterday's low, which was kind of some panic selling, it seemed like. But it pulled back right to this 145.74 area where it should have the prior high. Good low risk entry there was what I was thinking on it today, and we'll give it a little bit of room. Should hold yesterday's low. And then finally Boeing, this just continues to look fantastic. Want to see a pullback really badly on this one. Really like the way it's acting. 5 days up, a little bit extended now, back above the 200. If it comes up to the top of this cup base, and if you'll notice the left side of the chart here, this is where resistance should start to kick in. And if it blows right through it, then it's stronger than I even thought, and it'll go without me. But this 170-ish area here, 170 to 174, that's where we are now. So we're keeping a close eye on how Boeing is acting. And that's going to wrap it. As always, love to hear from you. Don at revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you can make in the market. It's about how much of that you can keep. Right now, we're trying to grow the money that we've saved clients during this bear market, and with mixed results. The indexes are actually working better than individual stocks are. Stocks are kind of making a move and then pausing for a while, trying to wear you out or scare you out, but we're having better luck with the index longs that we're taking, and that's where we've been focused. But there are plenty of leaders, and a strong market will take those leaders higher. That's what we're keeping our eye on. So as always, like I said, it's not how much you make, it's how much you keep. And wrapping up today, election day, 11/8. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.